Let's take a look at how to use Momentum Timer Pro when trading downtrends with the daily signals. If you haven't looked at the guidebook yet, I strongly suggest you download that and review that and then watch this video. So let's look at the piece from the guidebook. What a downtrend is when a security is in a downtrend as indicated by a declining moving average, such as a 50-day moving average. Momentum Timer Pro will suggest potential entry points as it attempts to find the bottom. Now, something that's really important to understand is Momentum Timer Pro was designed to look for bottom for long trades. But what you're about to find out is if you're a short seller or comfortable taking a short position, that you'll find downtrends are a big advantage and how the report will find them for you. Now, if you're not comfortable doing that, then what this video will help you understand is in a downtrend, you probably want to avoid taking long positions and wait for other opportunities. In a downtrend, its signal will be frequently wrong if you're looking for a long entry position, but it will identify short-term trades that may last one trading day to a few trading days. If you're a short seller, then you're going to reverse that, and the signals will be frequently right and will identify short-term trades that could last one or more days. In a falling market, it is extremely important to aggressively use stop losses, particularly if you're a long-only investor, to control your downside risk. So we're going to look at two different securities. We're going to start out with TLT, and we're going to look at this downtrend here and find some pieces in here to take long positions. And then what you're going to find out is if you're comfortable on the short side of the market, that how to identify those trades and why the report in a downtrend is really good at identifying short trades. From a long position, what you're looking for is you see these declining moving averages. The 21-day is in red, 50-day in green, and 100-day here is in blue. And what is happening is price is following the 21-day down. And what you're looking for a long position is some sort of reversal saying here that bounces up that you can catch this trend. If you're on the short side, you're looking to catch this to the downside. If you're a long-only investor, what you really want to do is wait till this thing bottoms out and then start using the report to pick up long positions, as you'll soon see. So let's look at some examples from the actual back test, from the actual reports of what you would see and how to identify it, how to understand it. So this comes from January 25th, 2022. You're going to see the symbol and name and a 1 all highlighted in gold, suggesting or indicating that we've gone from a sell signal to a buy. Now, in an up market and an uptrend, this is a strong signal. And as you'll see in a down market, this is a better signal for not a long position, but a short position. Now, how would you know that a security is in a downtrend without even looking at a chart? Well, you can come down here to the longer term signal. So we see the 1 month says no position, 3 months is minimum, 6 months is minimum, indicating that this is in a downtrend. So if you're not familiar with what these signals are, those are again covered in the guidebook. So right now you're looking at this report and you're seeing this is a downtrend with a buy signal entered. So how would you approach this? Well, here's the candlestick here. This one right here and this red one in the middle. You'll notice 21-day moving average moving down, 50 and 100 moving down, confirming it is in a downtrend. If you're a long-only investor, the way you would trade this is you would buy it open because you're going to have the report hopefully before market open, put a very tight stop loss on, and get stopped out shortly thereafter. Now, maybe it rallied up and you made a little bit of money, but reality is you're probably going to get stopped out and lose money. So if you're a long-only investor in a down market, you're looking for just small moves to grab and run. Perhaps the opportunity isn't what you're looking for. Now, if you're a short seller, this trade then is a lot better because it went down. The next day it went down. And if you held it for a number of days, a week, maybe longer, you caught a downtrend. So you can see in a downtrend, the report is really much better so far at identifying short positions than it is long. But again, keep in mind, if you're not comfortable shorting the market, you don't have experience to it, don't do it. Wait for other signals to come up that are long positions that work with what you're comfortable with. Now, a couple days later, it gives another entry point on January 28, 2022. Here's a report. You see, here's those two prior buy signals. There was a sell signal, and when a sell flips to a buy, this will highlight in gold. You'll notice now that the 3-month signal has gone to none. Again, validating this is in a downtrend. So as you look at this, if you're a long-only investor, you probably want to just move on to something else. If you're a short investor, well, maybe this would be better. But today's signal on this one, if you would have bought it open and held it and sold it closed for a day trade, you made some money. If you're a short seller, you would have lost money that day, but had you held it for a week or two, you would have made money. Again, the key you'll notice here, if you're a long only investor, you don't want to hold this for probably more than a day. If you're a short seller, you probably want to actually hold it for a week, maybe even longer. Let's look at the next one. About a month later, on February 23rd, we see there's a string of sell signals, flip to a buy, highlights in gold. Now look at this. 1 month none, 3 month none, 6 month none. What is that telling you? You just look at the report saying it's in a downtrend. If you're a long only investor, move on. If you're a short seller, well, you would have had a 1 day move down, made a little bit of money, and that would have been nice. If you would have held it for over a week, and probably more closer to 2 weeks, you could have caught this move down here. If you're a long only investor, you got stopped out and lost money. So far out of the 3 instances we've seen, if you're a long investor, you made money on 1, lost on 2. If you're a short seller, you made money on 2, lost on 1. But if you're a short seller and hold for, say, a couple weeks, you actually did pretty good. How about the next one? About a month later, on March 31st, 2022, a string of sell signals, flip a buy, highlights in gold. We have validation. This isn't a downtrend, no position size, no position size, no position size. And what do we see? This little candlestick here, for long investors, didn't end up being worth your time. Maybe you made a few pennies that day. Again, if you're a long only investor on a downtrend, don't bother. If you're a short seller, well, you could have picked this nice move up here. If you would have held it for more than a few days, you could have actually done pretty well. So far you get the idea is in a downtrend, Momentum Timer Pro is a lot better at finding the short side of the market than the long side. So if you're a short seller, this is now adding some new information for you to use. If you're a long only investor, it says stay away. How about we now move out to May 12th? And what do we see here? A string of sell signals, flip to a buy, turns gold, validating it's in a downtrend. See the moving averages, 21 day, 50 day, 100 day, all moving down. It picks up right here, trying to pick this move up, hoping maybe a push upwards towards 50-day moving average. Turns out if you're a long only investor, you're just a little bit still too early on this trade. If you're a short seller, well, you probably could have made some money there. So again, what you're seeing is in a downtrend, it's much better designed for short sellers than in for long only positions, but we'll look at a long only video here soon enough. So now let's take a look at GDX. We're going to try to look at this downtrend here. Now compared to TLT, there's a lot more volatility in GDX. So potentially if you're a long investor, you might want to, and you like buying downtrends, you might find better success here. We'll take a look and see how that works out. So the first one we're going to see is October 12, 2020. A string of sell signals, flip to a buy, highlights in gold. Now this is the early stages of a downturn. The 6 month is in a mid, 3 months is at a minimum. So again, we're going downward here, 1 month at a none. So it's telling you early stages of a downtrend. The moving average, you see at 21 day is moving down. The 50 day had just recently peaked, and it's this little candlestick here. So if you're a long only investor, well, you didn't make any money that day. If you're a short seller, and again, you held it for a week or more, you could have picked this move up here. So again, in a downtrend, Momentum Timer Pro so far, very good at finding short opportunities, not so much the long. How about November 4th, 2020? We now see some sell signals flipping over to a buy, turns to gold. We're still in a downtrend. How do we know? 6 month is now down to a min. 3 month down to none. 1 month flipped up to a buy. Not a big move here, but still this downtrend is there. And what do you see? This candlestick here. If you were buying at open on a long position, you got stopped out. There's no reason you would probably hold this for a couple of days because you're in a downtrend. There's too much risk there. But no, again, moving averages all headed lower. If you're a short seller, you could have made money this day, and if you would have held on to it, which seems to be the case for a week or two, you could have caught this move here after you got past this little blip here. So downtrend, Momentum Timer Pro, great for the short sellers. How about December 3rd, 2020? String of sell signals, flipping to a buy, turns to gold. You get alerted. You look and say, clearly in a downtrend. 1 month at none, 3 month at none, 6 month at minimum. What did you get? Well, you got this red candlestick here. So in a long only position, look, you're still seeing declining moving averages. It's too soon. This isn't really what you're looking for. Short seller? No, there you go. You got a little rollover on the downside. So far, short sellers should be looking at this and saying, this is fantastic. How about we look at December 16th, 2020? We have a string of buy signals, and then a sell and a flip to a buy, giving us, again, the golden indicator. We're still in a downtrend, perhaps, though, because of all these buy signals, there may be a bottoming occurring here. Let's take a look. And sure enough, that's what's starting to happen. The 21-day, at least in the short term here, is starting to bottom. The 50-day is headed down. The 100-day is headed down. So if you're a long seller and you see a moving average turn up like this, then you take a shot at it. And this is a great case. You know, if you're a short seller, this is probably not what you're really looking for in terms of a setup. But a long only investor, you've got a nice little move up here. If you would have held it a little bit longer, not that you would have, because it's still overall in a downtrend, you at least would have made some money on one day. So far what we learned from the report is short sellers love downtrends, long only, you should probably look elsewhere. February 9th, 2021, we have a string of sell signals flipping to a buy. Now clearly defined downtrend, none, no positions. What do we see? Red candlestick right here, moving averages headed down. Short sellers, this is what you're looking for. Long only, you're stopped out, and that's the end of the trade. So what is our takeaway here? As we'll just sit on the disclosure screen. In a downtrend, if you're long only investor, don't bother. It's not worth the risk. It's not worth your time. If you absolutely must trade it, take very small positions, tight stop losses. If you're a short seller, well, this is a great way to look at a 1 to 2 week trade, however you want to do it. But again, if you're not comfortable shorting the market, don't do it. Only those who have experience. This is now how you know how to use a report.